Hello everybody, this is Sabyasachi Paul from Instant Finances Limited, and today we would be discussing about the liquidity perspective of the Indian stock markets. Now, if we see FIA outflows year till date has been to the tune of rupees 2.9 lakh crores, and especially from January to June, on an average every month, net outflows have been between 40 to 60,000 crores every month. July, in comparison, has been much better with FII net outflows of around 6,500 crores. And of late, in the last couple of weeks, we are actually seeing some buying from FIIs coming up. Now, if we see that FI holdings in Indian equities have actually declined from a high of about 23% to below 18% currently, and this number was about 21.4% just before the pandemic came in. Uh, Currently, in the top 75 companies in India, the FII holdings has actually fallen to 24.8%, which is actually lower than the domestic holding of about 25.6%. So, currently, FIIs are actually lower than domestic holdings, which is something which we have not really seen previously. Now, why is this sell off happening? Now, one of the major reasons for this is that India has been one of the best performing markets ever since March 2020. And because of this, there has been some profit booking happening in Indian equities. And if you just compare it with the rest of the world, I think we are way, way ahead. Okay. In addition to this, in the last 14 years, from 2008 lows to 2022, Indian equity markets would have gone up by over 7x from lows of about 8,000 Sensex in 2008. So because of that also, we're seeing some amount of, profit booking happening. In addition to this, I think it's also a question of asset allocation happening currently with the U.S. Treasury yields above 3% and the U.S. dollar actually appreciating against most other currencies globally other than the Russian ruble. So, this again is a temporary phenomenon, and my sense is that once inflation were to come down and yields were to cool off, then we might see again money flowing back into emerging markets from these developed economies like the US. Now, there has been some correction in the Indian markets, and my sense is that if money will again start flowing back into Indian equities over a period of time. And I think one more reason why I feel money will flow back into Indian equities is that there's this concept of China plus one, which is basically finding an alternative capacity beyond China, so that the globally most of the developed countries, they don't have to depend entirely on China, and I think India will be one of the major beneficiaries of this. Uh, and if we see that despite this kind of an outflow from Indian markets, uh, Indian markets have barely corrected 10%. So we have got very good support from domestic institutions, and on to top that, once FIIs come back to investing in Indian equities, I think we should be heading significantly higher. Uh, in addition to that, if we just try and look at liquidity from a different perspective, uh, the total market cap in India currently is around 260 lakh crores, and the total amount of money sitting in bank fixed deposits in India is about 151 lakh crores. So even if 1% of that money were to flow into equities every year over the next 10-15 years, then we are actually looking at about 1.5 lakh crores per year, which again is similar to FII flows in a good year. In addition to that, the total amount of money in gold deposits is about 25,000 tons, which is equivalent to about 125 lakh crores. Now, even again, if 1% of that money were to flow into Indian equities, then that is about 1.25 lakh crores every year. So I think, given all this, at least from the liquidity perspective, I think we should be seeing very good flows as far as Indian equities are concerned. So if you like my videos, please share and subscribe to my ideas. Thank you.